Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. Today we are doing a Q&A on a free trading lesson I'm going to be sharing in the Discord. So if you miss the live session I'm doing now, you'll at least be able to watch the recording and see what I'm talking about, okay? And for the two members that are here right now, I'm just going to go over three different topics, and you can ask me questions about that after. I'll try and keep this fairly tight and short. And then, if you have questions about what I'm, talking about or something else, I'll try and answer the best I can. So real quick, let's take a look at Bitcoin. So I'm going to use Bitcoin, the 15-minute chart, to pretty much go through everything that I'm going to be talking about. So the way I approach charts, and this is good for especially beginners, but I think if you're an intermediate trader or a professional trader, advanced trader, this is going to come natural to you. It's just how you look at charts. Charts do three things: they uptrend, they downtrend, or they range. It's that simple. And the sooner you realize what kind of structure you're in, the easier your decisions will be. So if you are a newer trader, it may be best to write this down, make a little checklist, look at the chart and ask yourself, are we in an uptrend? Are we in a range, or are we in a downtrend? And the way you can do that is draw some lines. So this is an uptrend because what are you doing? You're going up. This is a range because what are you doing? You're going sideways. Sorry, I'm not drawing that cleanly, but you get the gist. And what is this? This is a downtrend because we're going down. It's that simple. Now the question is, how do you approach these markets? Well, in trending markets, and this is the second topic we're going to go over, you want to look for continuation trades. Okay? So if you want to follow the trends, you're looking for what's called continuation trades. So continuations of the trend. And there's a bunch of different ways you can do this. You can be looking for breakout trades, so breaking this level here. So if you're looking for liquidity grabs and then continuation, you wait for this level to break here. Then you would watch for this fair value gap right here to get tagged. This mini one right here. Okay, and then you'd wait for this level to break through. If you're more advanced and you're looking to tag, to try and grab a position as you're coming to fair value gap, that's what you would do. But if you're looking to be a breakout trader, you would just wait for this level to break and then have your stop above the last swing high or the last, consolidation right here. And then, watch to see if price is going to continue lower the trend or if you'll reverse. That's all you have to do. All right, that's all you have to do. And if you're in a range, instead of looking for continuation trades, you want to look for reversals. Because when you're in a range, the last thing you want to do is start trading within the middle of the range, right? That's common sense. What you want to target are the lows and highs of the range. So simply put, here's the high of this range. Here's the current, this is the most known low at the time. Okay, so you'd be looking to target the lows here and the highs here, and then either wait for a break of the range or try and play the range a trade. So you would look for some sort of bottoming candles, so something like a high wick, kind of like here. Look for engulfing candles and sort and try and trade like this. Or if you want to just be a trend trader, you'll be patient and wait for the actual range to break and then play the breakdown. Okay, that's really all it comes down to. All right. The hard part of all this isn't recognizing what kind of markets you're in. It's actually pretty easy, as you saw. It's actually controlling yourself, your emotions, and being consistent in your decision making when you're in these markets. And some people's personalities do better in uptrends. Some people do better in downtrends, and some people do better in ranges. It all is based off of your trading strategy, which all derives from your personality, your emotions. So if you're someone that is more comfortable with breakout trades, so you're not comfortable buying up, you want to buy down, or you want to buy up when the trend's up, down when the trend is down, you're a breakout trader, you're a trend trader. You'll do very bad in a range market emotionally. You can make yourself better by being able to recognize the range when it starts appearing, and you can look to avoid it, or you can try and develop some trading techniques to maybe get some good trades in those sort of market structures. But the first step before you get to that point is making sure to recognize what sort of structure you're in, and the easiest way is just to do exactly what I said. Look at the chart, draw a line. Are we going up? Are we going sideways? Or are we going down? Okay, now another aspect of trading is, and this is a little bit more advanced, it's still fairly simple. Let me just get rid of all these drawings. Is liquidity. Okay, so what you want to look for in charts is liquidity, and the easiest way to actually get a good idea of what liquidity is think of yourself trading. Where do you put your stop losses if you place them on the chart? You look for swing lows or low high pivots. That's where liquidity will will start to pool. All right, and if you're looking to move price as a market maker, let's say, you need liquidity to deliver price to a place. So that's why you have this in every chart, this structure, okay, or this structure. So when you're going down and then price comes up, that's when price is looking for liquidity to then deliver price lower. Same thing on the uptrend. Price is looking for liquidity to the downside to then deliver price up. Okay? So every time you get a wave that goes opposite of the trend and the trend is not breaking, you're now going through a liquidity grab. And the ways you can target liquidity grabs is looking for pivots or high swings, low swings, and then get your eyes used to seeing fair value gaps. Okay, so fair value gaps, again, not my creation. You can study that through ICT on YouTube, Inner Circle Trader. But simply put, a fair value gap is pretty much an imbalance. So you have a trending move or a volatile move in a direction, and between three candles you have a gap. So here's this big move here, and then from the low of this high candle here to the high of this candle right here, you've created a fair value gap. Now the trend is down, and we see on the rise up, the price gets into this fair value gap, doesn't fully fill it, but starts tapping the liquidity that's residing here. Because fair value gaps are like, think of like pockets of liquidity that were abandoned, orders that were run through because the movement was so rapid in one direction. There's orders that haven't been filled here. That's where the liquidity is residing. So you can look to target these levels to enter and exit positions. So if you're looking to enter a short, instead of playing the breakout like I showed before, so I'm playing the breakdown from here, you would look to potentially open short here, put your stop above this swing high or this consolidation, this mini consolidation up here, and then look for it to break down, and obviously you're in a much better position. Even if you took the short here, you're still in a winner right now, but obviously you can see which position was better and which risk reward was better. So I would tell you to get used to trying to see fair value gaps in the charts, but you have to recognize what kind of market you're in first. Okay, there's plenty of fair value gaps that get filled but doesn't lead to any trending move because you're in a range. And then there's plenty of fair value gaps that get filled to the upside or downside, but you're in an uptrend or downtrend, and you might still find yourself against the trend. So make sure before everything you recognize, are you in an uptrend, are you in a range, or are you in a downtrend, and draw the lines until your eyes can just naturally see it. It's that simple. And once you get that down, the hard part starts, and that's getting your emotions in check and becoming consistent and making sure that you're following whatever rules of your strategy you're using. And there are ways to see how things are trending and when it's most likely going to start reversing a trend that's pretty much going into a resting period. I'm not going to get into the details of that. That is for actual tutoring sessions. So if you want to learn more on when you can look for trending moves to actually show signs reversing at a very high probability level, that you can look into my tutoring sessions via the services link in the Discord. Now the last topic I want to go over, and this is something that is I say quite often, and I also I go into it pretty heavily in my tutoring sessions as well, but I think it's very, very important to understand this because it protects you from making mistakes and taking things too personally. Okay, so when you're wrong in the markets, you have one of two questions in your brain: was it my fault or was it the market's fault? Was I did I make a mistake or was it manipulation? Well, the truth is it was neither. Okay, as long as your strategy is sound, okay, as long as your strategy is sound and you followed your rules, you made the right decision. Okay, as long as you followed your rules, had proper risk management, and you lost, you still won. You did fine. Okay, The reason why is because markets are random. So if you have a 70% win rate in your strategy, which is really good, that means 70 times out of 100 you're going to win. 30 times you're going to lose. And the rate of your wins or losses, you don't know how often or how rare you're going to lose or win. You only know the total. So you can win 10 in a row, lose 2 in a row. You can win 5 in a row, then lose 10 in a row. The randomness is at the rate of which you get your wins and losses. That's the random part of the markets. And that's where most people blow up their accounts. When they have consecutive losses over and over and over, they'll blow up their accounts or they'll abandon their strategy and go somewhere else. You need to be able to accept that no matter how good the setup looks, no matter how high your win rate is, no matter what indicator says this or does that or blah, 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 the markets are random and only takes one person in the entire world to ruin your trade, and you have to accept that. And that's okay, because the probabilities are on your side as long as you stick to your plan and your strategy is effective. You still have a 70% win rate even if you lose 30 times in a row. That means you may win 70 times in a row. It's random. You have to accept the randomness, okay? All right, that's it. That's literally it. I just wanted to do this quick lesson. If you guys have any questions, you could type it out or just chime on in with anything I said. And if you missed the early part or you weren't here, I'll have the recording up after this Q&A part. Anyone have any questions or add on to anything, whatever. It doesn't even have to be just about the lesson. I prefer it. It could be about anything really, though.
Yo.
Yo.
Yo, what's happening? So, when also looking at these, for instance, like if we're looking at Bitcoin and Bitcoin dominance and stuff like that,
Mm-hmm.
how's that going to come into play? Well, basically, my question in a nutshell is what can we use other than just the charts to help with the direction?
Okay. Well, if specifically about Bitcoin, you can use dominance because you're going to find confluence in that. I think if you're trading altcoins, the dominance chart for Bitcoin is going to be far more important. But for Bitcoin and crypto as a whole, I would say you want to probably use the equity market. So you want to use the S&P specifically and the Nasdaq, because so far they've proven a really powerful correlation. So as we can see, like right now, the equity markets, the Dow, the S&P, and Nasdaq, they're having a pretty decent day. They're all up nearly 1%, and crypto, Bitcoin specifically, is having a fairly flattish day, almost down 1%. I would say that's quite a divergence, and I would expect Bitcoin's probably going to start flipping bullish. Okay, because usually the equity markets are pulling crypto in one direction or the other. It's not crypto's not really ever front running them. It happens, but it's very rare. So if you're seeing crypto or Bitcoin specifically really being lackluster compared to like the S&P, when the S&P is going up, there's a good shot that Bitcoin's going to start catching some bids to go higher. And let's look at the chart real quick. What are we potentially seeing here? I don't use divergences, but this looks like a divergence that's potentially forming. And this looks like we may be seeing in the short term, at least on the 15-minute, Bitcoin having a shoot to the upside to potentially change character. So, you want to make sure that if you're going to use a dominance chart, like you mentioned, you probably want to focus more on trading altcoins. But if you're going to be looking to trade Bitcoin, or you just want a good overview of what crypto is probably going to be doing for the day, just take a quick look at the S&P, the Dow, and the Nasdaq, especially the S&P.
Okay, cool. No, okay. No, I just want to double check.
No, I love it. No, thank you. If anyone has any
Because,
questions, it doesn't matter. Just let me know.
yeah,
If you want me to chart something,
that's
that's
the
fine too.
questions. Oh, okay, I got one for you, if you're down.
Yeah, sure.
I see ICP.
Uh,
ICP.
I've been looking at
Okay.
ICP as well. So the computer.
Yeah, that
On the daily,
that
quick.
thing.
So yeah, I've actually been watching this one for a little bit. It's interesting. It's interesting. Right now, what I'm curious to see is it's been relatively weak, compared to the markets. It hasn't had any significant push-ups, especially during this last week to week and a half. It hasn't really done
Oh
that
yeah,
much. It's been pretty lackluster. But what I'm curious to see is, will this low wick actually hold down here? Okay, so are we still forming that what looks like a potential Adam and Eve double bottom? My only
yeah,
issue with ICP is, for whatever reason, it hasn't had any follow through. But as we can see, it came right up, pretty much filled this entire fair value gap, all right, and it's fallen off.
yeah.
But I would still have a bullish bias for this right now, and I'll show you why. So look at this high pivot right here to this low pivot right here. Let's draw the trend line. Okay, so to me, what's potentially happening here is we've potentially broken out, and now we're going to see, can we hold this box of support right now? This is what's coming up now. So we're going to try and hold this consolidation, okay? And if we can hold this level here, even this low right here, we're probably going to push out higher. Okay, so you want to have a bullish bias here, but you have to be pretty careful with this one. If Bitcoin sits around where it's sitting, 20,000 to 21,000, I think ICP is going to continue to be relatively weak and probably trade sideways or potentially even go a little bit lower. But I like it. I like it
Yeah.
personally. I'm personally aiming, if it gets towards like 470, I'm probably going to start a position on it. I'm probably going to start a position on it, though it does depend on how it comes in, right? So I'm not going to go into, this, Nat, Matt, because you've done some
Yeah.
lessons with me. So I'm not going to go into
No, I
this
just
heavily.
wanted to, because I've been, sorry,
Yeah,
man,
gonna go,
for
go, go.
cutting you. I've been looking at it for a while, and I was also just wanting to kind of pick your brain at it and see what levels you're at, so I'm being sneaky.
Oh, I mean, I do. All right, I do have one. I have one level I'm looking at. So on the rise, on the potential rise, I'm looking at this. So this level right here. So this level right here is what I'm actually looking for, a change of major trend. So I believe
Yeah,
we're potentially beginning the push to have a change of character. But if this trend line gets taken out, I think what you're probably going to see over the next 3 to 4 weeks is ICP break back above $10. Okay, so this level here will get taken out, and my ultimate target will be, I'll show you something else, will be pretty much, if we do a full extension from the high of this breakout, will be around $15, which happens to coincide with what? This fair value gap here.
oh, no, I'm pretty stoked. Okay,
Yeah.
well, where you
See?
drew your bottom, uh, bottom, what would you call that? That bottom
Like the little rounding,
sloping line.
yeah, the rounding bottoms, yeah. The butt cheeks.
Yeah, I kind of did a little bit of a cone thing where we had right now, and it kind of coincides where that change of character would
Okay, no,
appear,
yeah. No,
and
you got it.
s- similar to, like you said, 15. I was actually maybe a little bit, yeah, no, 15.5. That's kind of my
Right
buffer.
around
Let
there.
me make it a little bit
And
bigger.
it does two
Yeah,
things. It's a fair value gap, and then there's also the liquidity above this high pivot over here. So
yeah,
you got to get into the habit. I mean, I know you are, because we've gone through our lessons already. But like,
yeah,
people need to get into the habit of looking to target liquidity zones. That's where the
yeah,
money is. So target there, and it's very very important that you get used to seeing price action, beginning the process of changing character. Okay, everyone can see
yeah,
the change of character. So like the change of character for ICP, like I said, would be the taking of this trend line and then closing above this consolidation. You can then say, when you see ICP do this, I think everyone outside of very novice traders can see, oh, ICP is changing character, it's going to go up. You don't want to be everyone. You want to be the person who recognizes, okay, we're potentially starting to change character here because we've broken through this trend line. We're coming back to test this general support zone. And you have to also get into the mindset, because the markets are random, you're going to be wrong. Where is it cheapest for me to be wrong? I ask myself that question all the time. Where is it cheapest for me to be wrong? It's far cheaper for me to be wrong down here than it is up here. Because down
Yeah.
here I have a set level, this low wick, that if this gets taken out, I'm wrong. So I either escape my trade, or I add on depending on what kind of trade it is, and we're good to go. But if I'm wrong up here, you may be very disciplined and be able to close out on the break here. But what will happen is, if you were to be wrong up here and then price comes back to this fair value gap here, or another one it makes from the rise and imbalance, and it comes up, well, what's probably going to happen? Either you're disciplined and you don't look at it again, or you buy up here. Okay,
Yeah.
and you're just getting trapped again because you're buying at this high pivot here where liquidity is sitting. You're just part of the liquidity every time. And every time that happens, you get into the pullback. So have you ever felt like, I'm not just talking to you, Matt, but people who are here in the
Yeah.
chat, have you ever felt like whenever you buy, price goes the other way? Have you ever felt like that? Like, oh man, every time I buy, it's like price goes the other way. And it does, because you're buying in liquidity pockets, because you're not seeing, you're buying right where the market maker is getting enough liquidity to move, to deliver price to a different direction. So, and again, you may not be wrong in the end, but you have to go through that drawdown, and it sucks. It absolutely sucks.
Yeah.
Yeah.
Another thing I wanted to maybe ask you is, I think I might have brought it up before, but so looking at the order book on an exchange,
Mm-hmm.
so if you that like it's 0.01 or whatever, how accurate would those order books be, or are they a load of crap?
See, that's a toughie. I would say in crypto, most of them are a load of crap. And again, I'm not talking about all exchanges, because you know, some exchanges, like Binance is a good example. Binance, and I have nothing against Binance. I actually like Binance personally, but they are notorious for wash trading. Like they do so much wash trading, and again, you know, they can justify it because they are the most liquid exchange, and their in-house market maker makes it happen. But it's not real, and the problem with that is, if you're trying to use order book to determine, okay, is, for example, is ICP is $5, it has so much buyers, it has so much orders, it's not going to break. Because they're wash trading, you'll see it just disappear off the book, right? There's a
Yeah.
reason why it's illegal in the traditional markets. It's illegal because you can also then manipulate price by tricking people into thinking that there's far more demand, or fear in an asset than there
Yeah.
actually is. You know.
That's kind of something I've been noticing. I've noticed since last week. I've been kind of checking these order books a little bit and going to the high numbers and whatnot, and just just the correlation of the numbers. Like, oh, are we going to go down to this
Yeah.
price where you're getting like massive orders, and it's like, uh,
A lot of times
how much of
it's
is that?
a lot of
It's
times it's
like
the
such
same.
bullshit.
A lot of times it's the same. Like it's just the market maker. I will say this though, one exchange that I know, like, does have fairly good order books, and when I say good, they're actually pretty shitty. It's Kraken. Like Kraken's, I use Kraken. That's my big account because they're in New York. They have the bit license, and they're a bank. So I'm more comfortable
Yeah,
having a
yeah,
larger account with them, even though I hate their UI. I think they have one of the clunkiest UIs, and their volumes are horrible. But the reason why they're horrible is because they're real. They're not doing the wash train because it's illegal for their license, so they
yeah.
can't. So whenever you see something big on Kraken, it's real. Um, but they're not a fun place to trade. Oh, Rish. I'm sorry. I'm sorry, Rish. If I'm just gonna call you Rish. I don't want to mispronounce your name any further. What about FTT? Oh, okay. Let me. I've been hearing about some drama that's been happening with FTT, with FTX, and Binance. I don't know the details, but I hear their Binance has sold or selling their coins. So you probably already see I have this charted already because I was in a position in FTT. I want to say early last month. I was in a long. Ended up closing that out in profit, and it was a good close because obviously we've come down since. And what's interesting about FTT is, I think because of the news, what's going on with Binance, it did break back under this level, but currently it's still holding the actual zone. So it hasn't broken under the low wicks. So this potential low is still not invalidated. And as long as Bitcoin holds above 20,000 and Binance, let's just say, or some other entity doesn't sell a big amount of FTT on market, this will probably hold. This will probably hold. FTX will probably be able to hold this level. But if we do get like another big exchange or a person selling a lot of FTT, then you'll probably see some relative weakness. But again, it's very cheap to be wrong here, right? So if you want to go long here, you go long here, and then just use these low wicks as your level, right? Whether you want to put the stop on the book or not, that's up to you. So personally, I don't put my stop losses on the book. I have mental stops, and I'm disciplined enough that I will close them out when I lose my level. But if you're not, make sure to put your stop on the book under the level. And if you're wrong, it's very cheap to be wrong up down here rather than being wrong up here. So again, if Bitcoin holds 20,000, FTT will probably hold this level. And I actually have the same measurement for FTT that I did on ICP, right? So ICP, what did I say? It's going to probably attack a liquidity level. You're probably going to see FTT do the same thing if it has that full extension, right? So if it confirms this potential Adam and Eve double bottom structure, then watch for this high pivot up here to eventually get targeted, which is around $31, almost $32, and then look for the liquidity above this level here to get attacked, because this imbalance. So when you have a consecutive amount of candles in a direction go one way, that starts creating imbalances and potentially starts creating fair value gaps. You'll look for this to get eaten up and eventually get the liquidity that's pulled above this level to get tagged. And once that happens, you can start looking for a short, because what usually happens is you'll have price break through that sort of level, and then once it taps that liquidity, it reverses down. Now that doesn't mean it's coming all the way down, but what that does mean, you're going to have a fairly significant pullback, and you can determine where you'll pull back a bunch of different ways. For me, it would be fair value gaps that form, from the trending move. If you like to use Fibonacci, you can then do it from the low to the potential high, and then look for a retracement back. So that's another way you can do that. You can even look for the confluence, and then look for the continuation to the upside. All right. And if so go short and look for those levels. But
hey, Lemons.
Yeah, go ahead.
When you're finding these liquidity gaps, like I've kind of like grown a keen eye to seeing them, but now I see so many of them. Mm-hmm. How do you assign like a significance to them?
Okay, so there's a few different ways to do this. Again, I want to reiterate, ICT is he's the guy, but he is very long-winded, right? So I mean, I understand why some people can't really follow his stuff. He has a few different ways. My way that I've simplified for myself, and it's something I've always done anyway. I've targeted liquidity before I heard about fair value gaps. He just made it clear. You have to be able to see what kind of market you're in. So in the beginning of this, this tutoring, this free tutoring, Ross, I showed Bitcoin. So I'll do it real quick one more time. So I said the first thing you should do when you look at a chart, especially if you're a novice trader, if you can't see with your eyes, recognize and understand what kind of market you're in, right? So what kind of structure you're in. Are you in an uptrend? Are you in a range? So are you going sideways, a range consolidation, or are you in a downtrend? It's that simple. The market does one of the three, always one of the three. If you are in an uptrend, you recognize you're in an uptrend, then what you can do, if you want to be a trend trader, you want to follow that trend, look for the pullbacks to those fair value gaps as imbalances are made going up. Okay, because like I've said, it's much cheaper being wrong at an FFG rather than being wrong on the breakout. You can still be a breakout trader if you're comfortable that way. So like here's a good example, right? So there's a perfect example. I'm happy I just spotted this. So here's an FFG going up, right? So we know the trend started here because we took out this consolidation down here and started going up. So, and here is a fair value gap, a bullish one that formed right here. Okay, so you break up. So you have one of two decisions. Do you want to be a breakout trader, or do you want to try and trade off the pullback of the trend? So if you're a breakout trader, you're going to be looking for the break of, let's say, this high wick, and then you'll go long here. And hey, it would have worked out. That's fine. Okay, that's fine. And your stop, depending on your strategy, could have been anywhere from this low wick here. So you could have been like, I'm just going to put my stop under this wick here. Or it could have been, I don't know, could have been all the way down here. Or it could have been right under here, right? Just depends on what you were looking for, how much risk you wanted to put on the book. You would have taken your position on this candle right here because you broke out. Now, what's the risk reward here? So the risk here is if you go down here, you're looking at about 1% before any leverage. Down here, you're looking at about 2%, and then all the way down here, you're looking at almost 3%, okay? Or you try and target the fair value gap because you recognize, all right, we're potentially starting a uptrend, right? So I'm gonna try and go long here at the top or bottom of this zone or in the middle. So let's just say you went long the top of this fair value gap, so that's about 20,447. So now where would your stop be? Either right under this wick, so that's 0.5, or you go all the way down here, which is under this low, that's 1.5. So you see the difference, how much cheaper it is to be wrong if you get in down here. You still would have been right doing the breakout trade, but you would have been way less risk down here, and you got more profit because your entry was better. So once you recognize what kind of market you're in, then you can start dwindling down which fair value gaps are actually relevant to you. Now, if you're trying to be a reversal trader, that's different. Okay, so if you're trying to chase after the reversal of the trend, I have my way. I'm not going to go totally into that because I'm going to keep that for the paying. If you want to pay for the tutoring sessions, you can learn it from me there. I'm not going to give that for free, but there are ways to see that a trend is likely going to wane and end, and then you can use fair value gaps to get that optimal entry. But the easiest way for me is recognizing, are you an uptrend? Look for continuation trades to the upside, so bullish pullbacks and go. If you're in a downtrend, look for those continuation trades, so pull ups and then look for the short to go further. And then for the ranges, simply put, you just want to look for reversal patterns. So that's bullish candles at the low of the range, bearish candles or bearish stretches at the top of the range. And you could try and play fair value gaps in here depending on how large the range is. But in my opinion and my advice, if you're a trend trader and you're very comfortable being a trend trader, I would say be patient and just watch the range, wait for the breakout, and then play the trend. Just wait. You'll save yourself some money if you just ignore the trend, if you ignore the ranges, or at least until you've developed a trading strategy that's good for you in that sort of structure.
No, right on. Thanks, man.
Yeah, no problem. Hope that wasn't too long-winded. Anything else? Any other questions? Again, it could be about the lesson I went over. It could be about a specific coin if you want me to look at it for you, or you have a general thought.
General thought. The last thought.
Sorry if you're hearing my cat. He's just jealous.
No. What about Doge?
Oh, Doge. Oh, the meme.
I saw one guy
of course.
Yeah.
What about the meme?
One guy saying,
someone's gonna ask. Let's take a look.
Are we gonna go for 0.08, 0.09, or are we just gonna have another leg up and have some fun?
Sure. So let's take a look at Doge. So, damn, right? So Elon buys Twitter and Doge goes. All right. So looking at Doge, I already had some stuff charted here. I just had these bottom wicks, like just had the lines coming off of them. But what we're seeing is the liquidity getting tapped, right? So we saw that price had this dramatic pop up, and now this consolidation level is getting tapped again. However, I don't see anything yet. So what I'm seeing is we're potentially going to go lower. Okay, we're potentially going to go lower because take a look at what we're dealing with here. I am bullish on Doge though. I am bullish. Hold on. Let me just let my cat out because he's going nuts. Let me just get him out of the room real quick. Come here, little guy. There you go. He just he was not stopping. He was like, please let me out. All right. So you have this fair value gap here. So it's very large fair value gap here. All right, and then you have this smaller one down here. All right, and again, I know we have some guys in here that like using fibs. I personally like fibs. So this would be closer towards your 78.6, really like almost a 90% retracement down here. And then over here, you're looking at anywhere from the 38.2, well, 23.6, 38.2, and then probably the 50. So let's see how close we got. And maybe, just maybe the 61.8 is somewhere around here. So let's go from this low right here to this high. Oh shit, I was way off. Alright, so this was around 90, 80 to 90. 78.6 is here, 61.8 is right here. This is actually a very large fair value gap, and the 50s right here. So you can use fib levels instead, or I would say why not do both? Like see the confluence, see where you're seeing the liquidity kind of pulling, where you'll see big fib levels as well. And then the 38.2's already been lost. And look where the 50's residing. 50's residing at this low pivot here within the large fair value gap as well. So there's going to be some strength right over here, and I think it's very likely you see price get there. But just like Ross asked, how can you kind of separate which fair value gaps are important? Well, look at the trend. Well, this clearly is potentially the beginning of a change of character, a change of trend to the upside. We've been consolidating for months, right? For months here. Finally had a massive breakout, and now potentially in that bullish retracement to try and make a new higher low. Well, what you want to target are obviously use fib levels, but you want to also use the fair value gaps. So anywhere in this zone here, potentially drop all the way back down here. That's still not bearish, guys. Okay, that's still not bearish until these lows are taken out. The lows have to be taken out. Okay, the probabilities of it actually going up higher from here does lessen. Okay, once you lose the 61.8, once you lose that, or I should say, once you lose that and then getting towards the 78.6, the probabilities do lessen. However, if price can be held, the probabilities of a stronger trend happen as well in the long run. So just keep that in mind. So as the lows get taken out, that's when okay, we're not a change of character. But that's why you want to play the pullback rather than breakouts, because if you're wrong, it's cheaper being wrong, down here or down here than being, wrong up here or something. All right. So you just want to be prepared to be wrong and look to where it's cheapest to be wrong. You want to look to where it's cheapest to be wrong because the markets are random. Elon can come out tomorrow or today and say, I'm never going to use Doge for Twitter. This thing will tank. All right, it's random. It's random. All right, even though like you could have 100 scenarios of this happening in Doge and 99 of them, continue to go up. There's one time it didn't. That could be this one time. So prepare as if it is that one time, and you'll save yourself a ton of money. And because it's most likely not going to be that one time, you bought at a better price. So you're going to make more in the end. All right? So you have to think that way. Live cautiously in the market, survive the markets. You'll make money that way. But in Doge specifically, I love it. I do think it's going to come back down. I think it's going to come all the way back down to fill this larger fair value gap. And I would look to start positions there. And then if this level starts getting lost, you want to watch to start adding on as you get closer towards this fair value gap. And I would target the top side of this fair value gap. Okay? But depending on Bitcoin, if Bitcoin's breaking under, like, let's say 19,000 and Doge is coming down here, you got to be careful because that could mean that, Doge may have broken out, but Bitcoin failed. And if Bitcoin fails, Doge will also fail. So they're not in a, Doge isn't in a vacuum, unfortunately. So keep that in mind as well. But for the continuation, I mean, Doge will probably break, if it does break higher, Like if it does actually continue the trend, it's breaking this high pivot here. Not sure why my thing is lagging so much. So it's probably going to break towards 20 cents and potentially all the way over here. So I was looking at this level here earlier in the week. So I was looking at this fair value gap right here to be the general target. And then once we get here, I would look for a fairly significant retracement. Probably all the way back to 20 cents and 18 cents. So this is, I'll give you my general idea of what I'm seeing in the long run. So you'll see DOGE probably make it down towards this fair value gap. Could potentially hold here. I think it's very likely it holds this. It starts tagging the 78.6 and then breaks back up. And then as it breaks up, starts tagging this level, has trouble here because it's just going to grab the liquidity there, start another consolidation, and then eventually have a pretty strong move up and then fail off of here and have a significant retracement. Though this retracement is still bullish because you're still in that higher low structure, right? You're still in that uptrend structure.
Well, that would be like the third wave. We're looking for that third nice big wave, right?
Yeah, exactly. And then and then this would probably be the beginning of like the fourth wave down.
The ABC.
Yeah, and then you'll have that fifth wave, and what's that fifth wave going to do? Again, it's going to be shorter than the third. It's going to come up to here and start grabbing the liquidity right here. Start grabbing these liquidities right here. And then you'll have your ABC correction. So for the Elliott wave guys, wherever that ABC goes, I don't know. Again, I'm not an expert in Elliott wave, but you'll look for the ABC after this gets taken out, or at least tapped into. Again, DOGE looks very good in the long run. It's just this is the beginning. This is the beginning for a lot of these coins. This seems like we're potentially at the beginning of a pretty big change of character. But it's going to be, we're going to have to, it's going to be very dependent on the S&P, the NASDAQ, and the Dow, and Bitcoin. If those four, specifically the S&P, if that starts breaking down significantly, then we're looking at crypto going to suffer. And then obviously the dollar, which I think is going to break down. I think it's already starting. So let me just pull up the dollar real quick so you guys can see. So what I've been watching for the dollar is, sorry about my screen. I'm not sure why I'm lagging. Sorry about that. But it's actually for the dollar. It looks primed to come down to test this bullish structure. All right. So it's in a bullish structure in the longer term. So on the weekly, but it's broken this, I would say, parabolic trend line finally. And now we should see the dollar break back under 110 to around 109-ish. And then probably shoot up from there and come back down. And I do think eventually it may even break a bit of the structure and get in towards this zone here, about 108 to 106. And as this happens, I think Bitcoin's breaking to 25K and potentially higher as we're having this breakdown in the dollar. That's what I'm seeing. Anything else from anyone? Like any specific coins or any questions about anyone who was here to hear the lesson. Again, if you weren't here, I am recording this, so I'll be putting the video up of the lesson as well, with timestamps, of course. So you'll be able to just skip to the lesson that you missed in the beginning. It's short. It's like 10 minutes, 15 minutes around there.
If no one's asking, I'm going to ask.
Yeah, go. Go. I don't care.
Oh, man. I'll probably
the guy who's gone through my actual sessions is asking the most questions. I love it. But don't reveal too much. Like don't reveal like the reversals and trends and shit. Like I don't want anyone else. People have to pay to learn that shit. It took me forever to figure that shit out.
No, it's pretty cool because like a couple of things that I've brought up, and it's nice to do like a little recap.
Yeah.
HBAR, bam, let's go.
Another one. I'm not surprised you're looking at the ones I'm looking at. The guy who's gone through all the lessons with me. I just started looking at HBAR as well. Yes.
Man, I'm so stoked with that algo as well. I did something last week and it seemed to.
Yeah, you caught algo. You caught it, right? Or did you catch it? Because I didn't. Well, let me get back to HBAR.
No, I didn't trade it, but
I know you called it out though.
I've been holding it. Yeah.
Yeah. I have. Yeah, I have it in spot, but I didn't take an actual trade on it for the futures. But I remember you calling it out. Okay, so yeah, HBAR again. HBAR is actually pretty interesting. It's similar to ICP, but way tighter, right? So HBAR is extremely tight, but I actually like what I'm seeing from it. I like how this is being built. So this is in my opinion what you want to do here is do nothing, but you want to observe. Okay, you want to observe, and you want to be pretty quick on the trigger. So what you can do if you have a bullish bias, what the cheapest thing will be is to take a position probably around this level here towards a low, or even now if you want. Okay, you take a position now, be prepared to be wrong. Okay, and then you have this level here, this low wick here, to be your exit if you're wrong. Okay, you need to give it some room, because what you're seeing here is, in my opinion, a bullish consolidation. It's a bullish consolidation. It's squeezing really hard, and I think it's primed to come out any day. And the bias is to the upside. The bias is to the upside. Yeah. Just take a look. So I'll do real quick. I just said in the beginning, there's three things the markets do, which is it goes up trending, ranging, and then downtrending. Those are the three things it does. That's all. That's it. It doesn't do anything else. However, there are different ways it ranges. There's different sort of consolidations. And you have to, over experience and studying, you have to figure out, what sort of consolidations biases are. Like, what are the probabilities? Again, it is just biases, right? So you have to be prepared to be wrong. You're going to hear me keep saying that because the markets are random. You're trading probabilities. So it's just like poker. You want to make sure the probability is on your side, because most of the time you'll be right. There will be times you're wrong, and the times you're wrong, you want to make sure it doesn't hurt. And the only way you can do that is by protecting yourself, by not exposing yourself too much per trade. So when it comes to biases of consolidations, I'm not going to get into the details, but I'm going to tell you, if it veers up in a slow grind, it's bearish. Okay? A lot of different books tell you the other way. Do not know why. If you see a consolidation that is veering up like this in a slow grind, it has a bias that is bearish. If you see it veering down in a slow grind, kind of like you're seeing here, right? The bias is bullish. Okay? And let me make it very clear. Why is this like that? Just add a line like this. Does it look clear? This is a rising wedge. This is descending wedge. This is a bear flag. This is a, descending wedge. Both flags are like this. But same concept. It's grinding down. Okay? Both flags are continuations. Descending wedges are potential changes of trend. Okay? Point is, when you have price action grinding in a direction, veering in a direction, not trending, consolidating, ranging in a general direction, it's the opposite most of the time. You're looking for a bullish break in this sort of scenario. The bias is to the upside. And if it's veering to the upside in a grindy fashion, the bias is to the downside. And there's a reason for this. Think of it like this. Go back to common sense. Trading is common sense. Get your emotions out of there. When you are selling something, do you want to sell it for cheaper, or you want to sell it at a better price, at a more expensive price? You want to sell it at the best price possible. So as a seller, you are incentivized to do what? Have price rise. Okay? Do you ever hear me say, we need the buyers to come in? No. Because smart money, buyers want to buy things cheaper. You'll hear me say we need the bids. That's different. Buyers do not buy price up. That's dumb money. Smart money buys price down. They look for these sort of consolidations. And that's why I've said, be the person to recognize the change of character before it happens. Do not be the person that's waiting for this to break. Recognize that the bias is to the upside, and if you're wrong here, it's cheaper being wrong here than it is up here. Okay? When you're a buyer, you want to buy at the best price possible within a bullish structure. That's what you want to do. So you want prices to be low. When you're a seller, you want to sell at the best price possible. You want the price to be high. Okay? It's that simple. That's why bearish consolidations or bearish patterns tend to veer up, and bullish patterns, bullish consolidations tend to veer down. This is the bullish consolidation, guys. Okay? Again, you're trading probabilities, you're trading bias. Doesn't mean it's going to happen. The probability is on your side, but there's a percentage of time where it doesn't happen, and you'll be wrong. But when you're right, hey, you're right, and it'll go up from here. And while you're going to look for the levels, obviously look for the high pivots here for the liquidity, and then eventually a continuous break that pretty much challenges this consolidation and fills this imbalance, right? So as I'm looking at HBAR myself, I'm not taking a position and yet, but hey, you're getting a quick look. For the Discord, I'm probably going to open up long HBAR. If we can break down towards this level here, then I'll be looking to target around these highs over here. So pretty much this high pivot and potentially this high consolidation, okay? So hopefully that made sense. If you have any questions on that, I'll answer them, but I'm going to be fairly vague because I go into more detail in the actual tutoring sessions that I provide.
Dope. Thanks, man.
Yeah, you got it.
I was gonna open you up and ask you about IOTA, because that's also something that's looking fairly similar to.
Sure, yeah. No problem. If everyone wants to sit in silence and listen, I have no problem with that either. So as long as you're here and hopefully you're enjoying what I'm saying and you're getting it, then hey, then I'm fine with that. But if you do have questions, don't feel like you can't ask. You definitely can. So very similar, very similar. And IOTA might have actually no, I don't think it broke out just yet. I don't think it broke out yet. But this is this is brewing. This is also brewing. Very similar. You're seeing what's cool about crypto. This is cool and bad at the same time, because crypto tends to trade in tandem for the most part. Everything is virtually doing the same things. Like, you know, they have the generally the same sort of feel, and that's good if you're on the, you know, if you're building out something or you're in a trend. Because if you're in a trend and you are on the right side of the trend in multiple positions in crypto, it's like Christmas. It's the best. But it's boring too, because like if you're waiting for stuff to happen, it's fairly hard to see what crypto is going to break out of the structure when, especially if Bitcoin hasn't done anything, right? So it's like you're still waiting on Bitcoin for most everything, but there are some outliers like Algo is starting, Matic started, BNB started, but for IOTA, same thing. You're veering down, right? You're grinding down, so you have a bullish bias. Okay. Now, if you break down, let's say you brought down here and it breaks under here, you know, you can just close out at the loss down here, rather than waiting for the change of character, buying up here, and then it failing over here. So you bought right here, and then it fails because it grabbed the liquidity here. Okay. And you're like, okay, I'm going to wait for this to, you know, I'm just going to wait for this to bounce off here, and then it fails, and it just goes lower. And if you aren't disciplined, or you don't have a stop on, or you're not quick enough, you're just gonna close out at probably where you would have bought down here, or potentially even lower if you're really undisciplined. Whereas if you bought down here, where are you gonna sell? Well, you probably would have sold right around here, maybe, where you would get, where the person who's waiting for this high to get taken out is getting in. You're probably selling the contract that they're buying. So, you know, it's like you just have to get into that mindset. Always target the liquidity levels. You know, whether that's taking some partial profits or just looking to like just move your stops or whatever. But if you buy these consolidations near the lows and you can recognize them, which you can. I mean, look, we're doing it right now. Nothing's changed. It's still in the consolidation, right? Like you're seeing it here. I'm recognizing this is most likely a downtrend, a descending wedge, a bullish structure. Hey, you know, so you want to take a stab at it. So it's not impossible to get into these positions down here. It's just you have to be willing to be wrong, and just have in your mind that it's cheaper to be wrong down here than it is to be wrong up here. And accept you will.
Another really good one. Sorry, man.
No.
Another really good one I've been looking at is CRV, and it seems.
Oh, curve. I saw you post a chart of that not too long ago. I think that was today or yesterday. Yes.
No, I think it was when I was drunk on the weekend. Because my girl was arguing with me. I'm like, oh, okay, fuck you. I'm gonna go to bed and get shot. I did that.
So yeah, curve is interesting. So curve I won't be taking any positions in. It's just the liquidities to for the Discord, I should say. I'm just not gonna. They're not gonna see me post a swing trade on this. But looking at curve is, I find this to be very bullish. Okay, and honestly, curve reminds me of Bitcoin quite a bit. So what do you have here is you have, to me, you have a Adam and Eve double bottom here. Okay, you do have an Adam and Eve double bottom. And to me, curve has started the breakout from this structure.
It's tested that sloping resistance as well, I think.
I think it broke. So this is how I'm drawing mine, right?
There we go.
Yeah, so it broke out, in my opinion. I should say this. It's begun the beginning, like it's beginning the breakout structure. So just to make clear to anyone who isn't aware, my definition of a breakout of a level isn't the closure of a level by one candle. There needs to be two. And the second candle must close above the high of the breakout candle. So essentially what I'm seeing here in my book is the beginnings of a breakout. It's not confirmed until I get a daily candle close above this level here. Then I can say, okay, we've broken this descending trend line. We're continuing a new structure of some sort, whether that's an uptrend or a new consolidation where something has changed. Until that breaks, I don't consider that. However, when I see what kind of price action we're having, I can tell from the probabilities, okay, we're going into a bullish consolidation, because what are we doing? We're veering down. Potentially we're going to come towards this descending trend line, and if we do find those bids and we get that fuel, we'll break past and then we'll make a new higher low. Okay, so price does the same things over and over and over. You have to make sure you do the same things over and over and over when you recognize the structure. And that comes from experience and that comes from studying. But you have to get to that mindset of like, I'm going to do the same thing every time I see this. And 80 out of 100 times I'm right, 20 times I'm wrong. And those 20 times I'm wrong, I'm protected because I'm not exposing too much of myself. I can withstand the losing. Okay, that's how you gotta come across it. But this is very bullish too. I mean, it's very bullish. And what I like about curve, you have some really clear imbalances over here, right? So you have the FFGs right here, like super clear. And what does it do? This FFG right here is where all the liquidity above this high pivot is sitting. All of it. So if this gets filled, so pretty much what I would say is watch if this FFG gets filled. It's not that the move to the upside's done, but I would not be surprised if you see a pretty nice pullback back towards like $1.40 and potentially like $1.35. You start coming back towards these highs right here, just testing those out, and then potentially any FFG that formed from this move, you'll fill those out, and then you'll probably have continuation up from there to start attacking this level up here if we have a really bullish Bitcoin. So just it's trading's not easy, but it gets easier when you look at the charts. You get more comfortable knowing what you're in. You can see what you're in, and the hard part is controlling yourself. But that again comes with experience, and honestly, I think it comes with people like me, your friends, people who are in this space who have good habits, and you listen to. We can help you with that. I've gone through everything you could think of, good and bad. I've made all the mistakes you've made or will make. So use me since I'm here. I won't be here forever. So use me, learn from me. So you don't lose as much money as I have, because if you hear how much money I lost, in the beginning, you'll be like, holy shit, so don't be me, then be me now, wise from my mistakes. So just make sure to ask not just questions to me, but people that are good. If you know someone's a good trader, ask them questions. I'm always asking questions. I started learning about fair value gaps, and I didn't really need to. I was profitable before that, but I started learning about it because I was like, hey, this is really good. So I took the time to learn from someone who, we've been trading around, he's been trading longer than me, but I'm successful enough where I could have ignored him and justified it, but I never would. There's always someone who's going to know more,
That's right.
Hey, it's scary. Hey, what's up?
What's up, buddy? Hey, check out. Okay, so just looking at when you consider a breakout,
Yeah.
which was very interesting. And I've seen it on some of the videos you posted. But I was just looking at my own chart. So look at BTC again. Would you have said? And this is without having reviewed what you've said so far.
Mm-hmm.
Would you have said the breakout was official on the October 25th?
Yes. Yes. Okay. So I love this. I love this question. I love this question. Yes. So I actually last night I was on JD's here, so he knows. I was on Cryptopedia, Bailu, who I'm good friends with, but we get into our disagreements. Oh, yeah. I was on his. He was doing a live yesterday, and we had a disagreement. Like, I think Bitcoin broke out. He doesn't. Right. So the reason why I think it broke out is because I'm looking at this trend line here. Right. This high here to this high here. Yep. That's a breakout, right? In any textbook I've ever seen, that's a breakout, right? And it also matches my definition, because you could even ignore these two candles. You had this bullish candle up, and then you had the next daily candle close above it. All right, like that for me, that's a breakout. And so far we had a that looks like a bullish consolidation and then a continuation. Okay, now we'll see if we're gonna fail, right? Like fail off this move right here and come lower, that's potentially in the works. All right, so let's go down to like the 1 hour real quick. But to me, I don't think it is. I think this is another bullish retracement, and Bitcoin is having a rest period because of two things. You're having to deal with the dollar is holding a level right now, all right? And the S&P, NASDAQ, they're all nearing resistance zones. So let me just show you real quick. So you have the S&P in a fair value gap right now, filling out the liquidity here. I think it will actually break through it and go higher towards this level up here, but it takes time. And Bitcoin is so correlated with S&P that it's slow. It's slower now. So because of that, Bitcoin having that pullback on the daily after that break, so after this break right here, makes sense, because the S&P is sitting in a very similar position. So I like it. I love that question. Thank you. I think Bitcoin did break out. I think we're in the beginnings of a big move to fill out this imbalance, getting towards 25K and then eventually towards 30,000. We may fail at 30,000 though. Like we may fail at 30,000. And continue the trend down, but I think we're in the process of like a Santa Claus rally. Essentially, we're in a good place for a rally coming.
Right. So rally, yeah, that's what I'm thinking. Rally throughout the rest of the quarter, and then pull back in 23.
I've been saying that I think Q4 is going to be bullish. I've been saying it for some time, and I think it's going to be for a lot of reasons, but I think one of the big ones is I do think the Fed next month is going to start softening up. Because like listening to them this time around, they were adamant on trying to keep their current policy, but they had changed some wording to where they're now taking into account how bad the actual world economy is getting, and with us losing a ton of our fuel reserves in the U.S., I think you're going to see a lot of screaming for the policies to start lessening. And I think in December we'll probably have a much smaller rate hike, probably like 50 points. And that pivot will be one of the big initiators for crypto and stocks to have a really, really good winter. That's what I think will happen. But I am still bearish on the longer term, unfortunately. Like the charts haven't shown me that I can be bullish, that Bitcoin's going to start going back towards the 50s, the 60s, or anything like that. But I do see 30. I do see 30 and potentially even 40, on the horizon, because one of the reasons why is, I mentioned in one of my more recent recaps, but earlier in the year, Bitcoin had broken this structure, right? So this structure right here, it broke bearish, because guess what? It veered up, right? Bearish structure veered up, and then eventually ended up breaking bearish, where the probability said it would, right? That's how it was. And it had that continuation lower. And guess, same thing here. What is this price action doing? That doesn't look like it's pointing down. It's veering up. Okay, that's veering up every time,
so
guys.
Hold on. So that breakout to the bottom, do you look for that same thing? Do you look for the candle to close on that lower? Let's see, what would it be?
So look for the low to get taken out. Exactly. Yep. Yeah. Every time. So the reason why I do that is because for a period of time I was a breakout trader, like early, like when I was younger, and what would happen is I would get a reversal. So like I would play the breakout, right? So breakdown in this case, and for whatever reason, then boom, the price would go up, and I would be in a bad place. Sometimes price would come back down, and I'd be okay. But a lot of times, I would just get pushed into a really bad position and eventually just close out on a loss. So I made this rule for myself of like, okay, so now what I'm gonna do, I'm gonna wait for a daily candle to close under the low of this daily candle. So right here, so we had the breakdown right here. I wouldn't have gone short if I was playing the breakout until this candle right here, because the low is right here. Well, let me show you. For this daily candle, that's the breakout, and this candle just barely closed under it. So if I was being really conservative, I might wait for this candle, but if I wanted to take the position, I would have taken it right here, and either candle, this one or this one, it would have worked out. All right, but it protects me most of the time from false breakouts. You still get caught in those sometimes, though. You know, it's not like 100%. Like if you know, sometimes you'll get caught in a breakout no matter what, but it does filter out a lot of false breakouts. And back to like what I was saying with this, like, so because this structure was lost, this rising structure, this very large one, what tends to happen if you go back and studying charts is you'll have these structures retested. So the bottom side or top side of these structures will get retested by price. Just like whenever a price loses a level, it tends to come back and do what? Test that level as support or resistance, depending if it was a break up or break down. So we could potentially see over next year, if we have a pretty significant rally back towards like the 50s, you'll see this level, if you extend it out, start looking like start getting tested as resistance. And it could still, Bitcoin can reach all the way up here and still be in a bear market, still fall off of that and come all the way down, taking out these lows, or at least getting back to the lows. And we've done this before, guys. Let's go back real quick. We've actually done this before right here. 2017, almost 20K, all-time high. Came down, then had, I would say, capitulation, and then we had the 2019 rally. The 2019 rally was a massive rally. Came back. It took almost 60% of this trade, of this trend. Came back almost 60% and then retraced all the way down and eventually started tapping the same low levels down here because of 2020. So it's happened before. So just keep that in mind. Like, we were not out of a bear market for Bitcoin really until this level, the previous all-time high, got taken out. But what we did see was the potential of change of character before that happened. We had the signs that a change of character was happening because of a couple things. We knew because we broke down here, price came up, we saw we took out these low pivots, started trending higher, okay? And then we even took out this consolidation right here, came back, tested this level, that tested fair value gaps as we came lower, that's this wick right here, tested this fair value gap right here, and then continued higher. So you had the signs of a change of character, and then even this huge retracement was it retracing back to this zone here, and even the 2020 drop because of the COVID lockdown still made a higher low from these all-time lows down here. This would have been very hard to hold, and on all honesty, this would have been extremely hard to hold, especially if you bought, down here. I would not have blamed you if you got, shaken out here, because this was unprecedented. This was a black swan event, as they say.
Right.
But if you could, it was still a continuation of the larger trend. Look how small it is compared to like what happened after. So you just have to keep that in mind. And for bullish structures like this, what did we have right here? Just as another example. So I go over this more in my tutorings, but I'll give you like I go in more detail. What do? They veer down. A bull structure veers down. Not up, down. Bear structures veer up. You see? Does that make sense, guys?
Right.
It's that simple. It's that simple. You just have to look into the chart and ask yourself, what are we in? Are we in an uptrend? Are we in a downtrend? Or are we in a range? It's one of those three. And then if you're in a range, is a range going sideways, like a channel? So is it actually going in a channel? And if it's going in a channel, you do nothing, right? You either trade the channel like a box, like this, okay? You just trade up and down, or you do nothing and wait for the breakout one direction or the other. Or is it veering down? And if it's veering down, where's the best price I can get into as low as possible to go long? And if I'm wrong, I just look for these lows, wherever the lowest lows are, and get out there. And if it's going up, if it's veering up, I look for the short as high as possible within the structure. It's that. That's it. That's it. The hard part is you. I mean, the hard part is the emotions in it, but not the actual chart. It's there. The answer is there, but the actual emotions are the hard part. So you're not going to hear me say trading's easy. It's not. It's the emotions behind it that make it very, very difficult.
Interesting.
Yeah. Any other questions?
You may have already covered it. I'm sure you have, because I got it late. But
All right. No. I'm happy you stopped by. I'm gonna end it here then, because I am recording this. So like the first like 5-10 minutes, I went over three basic like topics. Quickly, I went over how to recognize the markets if you're an uptrend, downtrend, or range, like I kind of just said now. I also said like what kind of trading you're doing in those structures. So if you're trading trends, you're looking for continuation trades. So I go over how you look at that. And if you're trading ranges, you want to look for reversals. So reversals in the range, and I go over that in the beginning. And then obviously I do a touch on the markets are random. That's the third topic. That's a very important aspect to understand in markets. I go over that way more heavily in my tutorings. So I did this free tutoring lesson. It's kind of like a introduction. If anyone is interested in it, whether you're here now or you're watching the VOD, you can always DM me if you have more questions. And then obviously just come to the Discord and you'll see a tab called the services links. Just tap that and there's the Patreon link or the crypto payment link, and you can get more details from those pages on what kind of services you'll expect. The tutorings usually last 1 hour to an hour and a half. The first one's usually the longest because I have to get an idea of where you're at and what kind of trader you are and want to be. And then it usually takes me, at least so far, I've had, I want to say, 6 people come and go. One still comes in from time to time, and one still has 2 more sessions to their name. They got busy with work. It usually takes around 3 to 4 sessions, and I usually get people in a pretty good space. I'm not going to claim I've changed their lives or anything, but I get them in a place where they can start looking at the charts simpler, and they can recognize trades a lot easier. So Nassi, who is here, Matt, I love his progress. I mean, he's become very profitable. He's become a very profitable trader, and he's had 5 sessions with me, and the last one was just to hang out, essentially. So if you are interested in that, it usually takes me 3 to 4. Some people it's only taken 2, and some people it has taken 7, right? Because everyone is a little different. All right, that's it, everyone. Thank you guys for stopping by. Again, any questions, just let me know in the Discord. And thank you if you're watching the VOD. I'm happy you found the time to check this out. And everyone, remember, be patient, be vigilant, and be nimble. Love you guys. Take care. Bye.